Hey. So today we're going to be discussing the economic outlook of our economy and what it looks like as far as the stock markets are concerned, certain policies. And today I have with me Mr. Building Bread himself. Kevin, how are you doing today?
I'm doing pretty well. How about yourself?
Doing good. Can you introduce yourself to everyone for me, please?
Sure. My name is Kevin Matthews II. I am the founder of Building Bread. I've been doing this for 14 years now. I have a degree in economics and a master's in business. And my job is to make investing simple. So I break down the stock market, break down the economy in a way that you can actually understand and most importantly, take action.
I love that. Okay, I didn't know you had all those credentials. That's really cool.
Yeah. One other thing I didn't mention, but I think it will be really important as we get into the conversation.
Absolutely.
My professional background for almost 7 or 8 years was as a financial advisor. So, in terms of like managing money and the investment piece, that is what I did for a number of years. And I managed over $140 million in investments. So, when it comes to like the millionaire status and like what people do with their money, especially as they get up there, I was one pressing those buttons. So
That's so
when we talk
cool.
about the stock market, like we have some experience there. So we'll really kind of get into the stock market piece as well.
What made you decide to move away from being a financial advisor and start building bread?
Yeah, great question. So first, I actually started building bread before becoming a financial advisor. So I started this in college and it is still going, which is wild. So it's like one of the few things I've been incredibly consistent with. But the reason why I did is because I started it because I wanted to help people like us. I wanted to help people who look like me. I wanted to help people who didn't start out with a whole lot of money either. But as I got good at that job, they kind of move you up the ladder, which means that at one point, I could help anybody, but then it got to a point where they say, "Hey, look, you can only help people who have 250,000 in cash. You can only help people who have $1 million." And I was like, I'm 25 and I don't have that. My
Right.
parents don't have that. And I was helping people who didn't really need it. And in 2017, I hit the top 100 list for the most influential financial advisors in the country, which was great. And it was fun, but I really got restricted in terms of who I could help, what I could say on social media, and really have purpose and meaning. When you got, 10 million and stuff, that's cool. I learned a lot and I got to help
Right.
them, but I really didn't help the people I came there to really help.
Your impact was limited, it's significant.
Yeah.
Yeah, that
Yeah,
makes
because like you already there, like you fine.
I,
You'll be all right.
I got a bigger job to do. You're good.
Yeah. It's like, okay, like I moved some stuff around. Like your kid was not gonna go to college, right? I can't really change your life in the same way for someone who just had a kid and I helped them save and like open up a 529 plan. Like, hey, do this, and this, and your kid's gonna go to college and be debt free or whatever, right? Or help somebody fix their credit and get, buy their first house when they would not have been able to do. Like that means everything to them. If I'm helping you buy your third beach house, bro, okay.
Okay.
It's like whatever. It's replaceable to them, but it means everything when it's somebody's first home, their first
Yeah.
stop. And that like means more to me, and it means a whole lot more to them.
Yeah, that's beautiful. So, from your perspective, where do you think the economy stands right now, and what key indicators are you watching?
Yeah, so it there are two parts when it comes to the economy. There is the statistical data. So, as an economist, we are looking at unemployment, we are looking at the stock market to a degree, but not that much. And we're looking at what we call GDP, that's gross domestic product. That is the amount of stuff that we produce. All of that stuff is good. Unemployment is low. It has come up just a bit, but it was near a 50-year low. Again, unemployment is low. Inflation has come down. It's still high, but it has come down. We talked about unemployment earlier. The stock market prior to the election this year has hit an all-time high 30 different times this year. So when you're looking at the numbers, just the numbers, the things we always check every year, the economy is fine.
Yeah,
When you ask people how they feel about the economy,
different. Yeah,
they're going to tell you that it doesn't feel good.
yeah.
Those are two separate things. So, is it feelings over facts? Depending on who you ask.
I
Um,
think I think the one thing that we do very well is that we are
mhm.
resilient.
Yeah.
So the reason why I feel like the numbers look one way and people feel another is because they don't see that people are working two and three jobs to keep
Yeah.
up with what's
Yep.
going on with, with the economy. But they're doing it because we're resilient and we have to survive and we have kids, people to take care of and
Yep.
stuff like this. So yeah, for sure. Statistically, the numbers may show something that's very different than how the brunt of what people are taking. Because I don't even know if there's data that can be produced to talk about the physical labor that we take on to survive in the,
Hmm.
you know what I mean?
Yeah, yeah, and I think too we've also one price increase. Like prices have always increased over time. That is actually normal and healthy for an economy to do. Like we ain't seen a normal dollar menu at McDonald's in a decade, right? And we're never gonna see a dollar McChicken anymore. Like it's just not gonna come back. But the speed in which it happened from 2019 to now, like that was really fast. But I think
Right.
most importantly, the thing is we all remember pre-pandemic what things were and how like we all have like a pretty clear line of like I remember things being like this and now they're not.
Yeah.
I
Whereas
think
in
in
the
every
past, it was so gradual that you really,
yeah. Yeah,
yeah.
like things like really evolve where I don't really know where that line was. Whereas like when did movie tickets get really high? When
Yeah.
did that price on Netflix like creep up on me? One time like, hey,
These streaming services,
yeah, you be like, when that was really expensive. That don't cost the same no more, right? Whereas like now, it's just like, oh no, I remember there was a time where they didn't ask me to tip everywhere all the time. Like it's stuff like that,
yeah.
right? Where now we're being asked to tip every single place, even before I even get my order. It's like I remember there was definitely a time where I only used to tip at restaurants and maybe a coffee shop, and that was it. Now,
You can't even like do a tap pay, even if the person did nothing and it just
yeah,
tap pay and it's like,
yeah.
do you want to tip? What exactly am I tipping for,
I'm
bro?
like, I came in here and picked up the order myself. What am I tipping for?
I
Right. So it's
checked,
like,
look, I got my stuff, I checked myself out, I bagged my stuff, I did all of this. What am I
yeah,
tipping for?
I just checked in the room. I know y'all ain't cleaned it yet. I'm tipping you, and I ain't even seen the room yet. Yeah. So it's stuff like that that all contribute to that inflation number and all contributes to wait, I am paying more money. And the gap between I used to have this much left over and now I don't makes me feel more anxious and that makes me feel like the economy doesn't feel the same. So like that is what when you ask a normal person what the economy feels like, they look at their bank account. That's what the economy is to everybody else. And I think to a politician, that is what they should think about. To an economist, I'm looking at, well, I'm looking at these three things. What is GDP? What is blah 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 blah. Right. So like I can translate those two, but to a normal person, that is what the economy is. What is my bank account? What is my credit card number? Not number, but what is my balance? And are those things going in the right direction or not? So, it economy is trending in the right direction numerically, but to people, no. And that's the reason why. We have way more charges. People are asking for more money. Things have increased. And the fact that we all know exactly when those things happened and it happened so quickly is why we feel the way that we do.
100%. There was a clip, and if I can find it, I'll put it in here, where she went through the cost of like a single mother to pay her rent, feed her kids,
Yeah.
daycare, these expenses versus what um the average pay is for certain
Hmm.
types of jobs and how people literally have to work a job and a half or two jobs just to get by. So I was able to find the clip and I'm going to play it for you now.
She had $2,425 a month. She rents a one-bedroom apartment. She and her daughter sleep together in the same room. In Irvine, California, that average one-bedroom apartment is going to be $1,600. She spends $100 on utilities. Take away the $1,700, and she has net $725. She's like me. She drives a 2008 minivan and has gas. $400 for car expenses and gas. Net $325. The Department of Agriculture says a low-cost food budget, that is ramen noodles, a low food budget is $400. That leaves her $77 in the red. She has a Cricket cell phone, the cheapest cell phone she can get for $40. She's in the red $117 a month. She has after-school childcare because the bank is open during normal business hours. That's $450 a month. That takes her down to negative $567 per month.
So I 1,000% agree with you. And, I know that with interest rates, that's going to affect a lot as well. And so I'm wondering, with the tweaks that the Federal Reserve has been making towards the interest rates, what impact do you think that's going to have on just everyday people, but also investors? Because I do want to get into the stock market. We talked about the consumer, but how does this look for investors?
Yeah, so that was one of the things that has helped the stock market continue to rise so far this year and will likely continue into next year. For those that don't know, interest rates are the things that do impact us all. It is going to help people to borrow at lower cost and is going to help companies to borrow at lower cost. So, for example, if you are looking to buy a home, that is going to now come down in cost. For every 0.5% or so that comes down in a mortgage rate, that can actually help save you hundreds of dollars per month on that mortgage payment. Now, it's going to hurt you as a saver. You probably got an email like we all did that says, hey, your high yield savings account was paying 4%. Now it's going to come down to, let's say, 3.5% or what have you.
Yeah.
So those things are going to change. Perhaps your credit card rate could change and come down, but that does come down a bit slower. If you're looking to buy a car and if you're getting an auto loan there, that could also change. For the stock market, generally speaking, when rates come down there, the stock market tends to do well. That is because tech companies, especially, but other companies too, when those rates come down, they can borrow more, hire more, and invest more in more equipment, more stuff for them to continue to grow. So it usually helps the stock market to grow.
Yeah, which when companies can borrow more, they expand, which means
Yep.
more jobs.
Yep. Usually
Yep.
means more jobs, which hopefully means more higher paying jobs, right? It's one thing to get a job, right? It's a different thing to get a good paying job that can help you afford the stuff that you need. So, in theory, that would be great because you get a better job, you can actually buy the things that you want to buy. And we do know that close to 66 to 65% of our economy is based on consumer spending. So if you can have things and afford to buy things, that's going to feed back into the economy as a whole.
And then I have a question. So, as far as investors are concerned, what sectors are you encouraging investors to be cautious in, right? Because there are some, we just have our president-elect Donald Trump. One thing I can definitely say is he makes the marketplace move. Okay. He definitely does that. So, what is it that you can caution investors to do or even avoid during this time with all the volatility that the market is about to experience?
Yeah, I don't have an area that I would generally avoid at this moment, especially like if I were to look back and to see, you know, just general places to avoid outside of like just penny stocks. Those are stocks that are like $5 and below. They just are very shady. Meme stocks and meme coins. I would just generally avoid those overall. But I would just diversify. Have your money in those different buckets, and we can kind of get into more details on what some of those buckets may be. But just be diversified because it is very early today, and we don't have all of the pieces in place just yet. The president is one person, and we do know the stock market generally performs well regardless of who is in the Oval Office. However, we know who the Senate. We know Senate is going to be in the control of the Republicans right now, but you still need to know who is in the House. Before I got on today, it is leaning Republican, but we don't know just yet. Those are the people who are going to really set tax law and a bunch of other policies that's going to impact a lot of things. So we don't really know just yet. We don't have 100% of all the puzzle pieces. So right now, you still want to be diversified and be ready to kind of move all of your puzzle pieces in your portfolio in the places that they need to be. So it's best to kind of sit still and be diversified, but don't have any other places to say, hey, avoid this because we don't have everything slotted into place just yet.
So with policies, they're likely about to shift a bit, right?
Yeah.
And given that, are there any suggestions that you have as far as what sectors may potentially perform well for the economy, just given its current condition and where policies might be headed?
Yeah, so we would expect technology to continue to do well. A part of that is we know interest rates are likely to continue to go down, and we don't expect there to be any major regulation to cut down on some of the mergers and acquisitions and lawsuits that have been trying to slow down some of these mergers and acquisitions. For example, the Biden administration has been pretty aggressive in trying to sue companies like Google and Nvidia. Well, the Trump administration usually doesn't go after those larger tech companies. So Nvidia should continue to do well. One would think Google, companies like that should continue to do well, one would assume. So the tech sector, I don't really see any major roadblocks there. Again, it is quite early. We'll see whether or not gold will continue to do well. Gold prior to the election was at an all-time high. I generally suggest that you don't want to have more than like 5% of your money in gold because gold can be quite volatile, but it can be if there is unpredictability, if there is, a little bit of chaos, that does tend to be a decent place to put gold money into gold. He has presented some plans on unleashing crypto and allowing that to kind of come to the forefront of the American economy. Will Congress pass that law or pass any laws in that space? We'll see. But we do know that Bitcoin has taken off in the last 48 hours or so. So that is something to take a look at as well. So those are some areas. I would also take a look at energy. Energy stocks, companies like Constellation Energy is one of my favorites there. NRG is another one that is one of my favorites. Those companies in that space, he is very big into drilling and oil. If Republicans do take the House, they do tend to lean towards that space as well. That could be another area that may continue to do well. And again, they don't tend to be very big into environmental regulations either. So that may be a space that will we say overperform, do better than what it's already doing currently.
And I think defense stocks are going to do well.
Yes,
Um,
great
yeah,
point.
percent. There's some ETFs that I can actually give on that. So with
Hmm.
ITA, so iShares US Aerospace and
Yep.
Defense, and then the Industrial Select Sector SPDR Fund,
Hmm.
XLI. I think those are going to perform well as well. And then also like the banks are buying into Bitcoin and they're locking in that too. So how do you feel like people in the labor force can prepare for the economic shifts that I feel that we're getting ready to take, but just looking at how the economy is moving, looking at the direction of where money is being placed, what shifts need to be made because AI is going to replace a significant amount of these jobs within the next few years.
Yeah, that's absolutely true. And I honestly don't think Congress is equipped to protect any jobs or any space. Just honestly speaking, they too old. They just they can't
Not
rotate the
innovative
PDF.
enough.
They're not innovative enough. They can't rotate a PDF. Like ain't no way they're gonna write a decent regulation to like
Not a
protect AI.
PDF.
They can't. They can't. They can't. All right. Look, great. The current president is old. The one coming in is old. They both old. But
Yeah,
to
why
answer,
don't we do that? Why don't we get anybody young in there with, just one time? Let's try it, America.
can we
Try it one time.
please can we the test needs to be rotate this speed.
One time.
Can
Maybe
you operate this iPhone?
or maybe like the vice president be young. Somebody who can counterbalance. You know what I'm
Yeah, I
saying?
think
Yeah.
I think yeah, I think JD Vance is like 50 something. But yeah, we need anyway.
The fact that I'm in my 30s and I'm like, yeah, 50's young.
Right. But to answer, what was the original question? Now I'm all off. The original question,
Uh, how oh yeah.
how do we position for AI?
How can the labor force protect themselves? Like my
Yeah.
kids, real quick, my kids, I have a 17-year-old, an 11, and a 9-year-old, right?
Hmm.
My 9-year-old is learning coding because
Yep.
it's my personal belief that we moved from a society from where the
Yeah.
machine supported us to where we're now supporting the machines, right? And I
Hmm.
feel
Hmm.
like they're preparing our children for that exactly. So with the
Yeah.
labor force in general, how do you feel like they can better prepare themselves moving forward?
Yeah, so you're absolutely right. I have a 4-year-old and a 6-year-old, and we're doing the same. So my son is learning coding as well. And that is the answer. What most people don't realize is this is the natural chain of economics, is that you more developed nations learn to specialize. And I know it's not fun and I know it's not sexy, but as we learn to kind of move up the chain, we are developing AI right now. The United States is at the forefront of AI, and as we get better at that, we tend to kind of shed and ship off I don't want to call them rudimentary jobs, but kind of the manufacturing things to other countries so that they get good at that. And we focus on the harder things to do, which right now it is hard to make microchips. It is harder to create AI than it is to building a car is hard for me. I can't do it. So relatively speaking,
I read
uh,
an article. I read an article that said the new millionaires are like mechanics and stuff like this now. Why did
yeah, well, also some are, but now think of how much more computer chips are in cars now than what they were 15 years ago or 20 years ago. Remember when we had the chip shortage, how many new cars we did not have
Mm,
because they're way more complex today than what they were then. And
mm.
that's a part of it too. Like the mechanics today are way more tech savvy than like my uncle Juju who could fix a car whenever. Right? Like now.
But to your point, the mechanics who adapted, right?
Exactly.
The mechanics who
Exactly.
adapted were the ones who thrived.
Yeah. So that's the answer. So number one, yes, AI will take and replace jobs. Also, AI will also create new jobs as well. So I think we need to be careful about some of those innovations that AI will create. For example, when social media was created, there was no social media manager. I mean, would we be in the positions that we are in today if social media didn't exist? I don't know. Had it not been for Instagram and YouTube and Zoom, would my business exist in the exact same way? Probably not, because I would not have a way to reach out to an audience. So social media and technology created a lane in which I was able to learn and evolve and step into this space.
Mhm.
So you also have to be able to see the landscape, train yourself, whether it's coding or whether there is going to be a new lane for you to step into. But now is the time to educate, train yourself, and look for that whatever that new lane is going to be for it to open up. So now, I mean, I'm looking over my son's shoulder, like, oh, what are you learning? Right. And trying to learn to code and be as savvy as I can to kind of move should I need to as well. Because you can ask Chat GPT right now to come up with a portfolio,
Yeah.
right? I'm like, So what are the things that I need to learn to make myself stand out a bit more? And I think those things are important too.
I can say this for sure. Everyone who had MySpace already knows how to code. We
Yep.
got it. We if you have MySpace, you know how to code. It's just different now.
Yeah.
With Python and SQL, it's getting interesting. And I like how they created games to learn coding. I think that
Hmm.
that's really cute. So yeah, you're absolutely correct that with changes also come new opportunities. So where we see things that we're used to starting to fall off and shift, like I'm seeing, oh my gosh. I went and I don't even eat fast. I do not eat fast food like that. But I went to Checkers, right? And the the kiosk thing that I pulled up to and drive through,
Hmm.
the AI did the entire order and I could say like I was saying it. However, it was giving me time to like process my thoughts. I would say like, "Oh yeah, and I forgot to add such and such." And it would process it and say, "Okay, no problem. Fix the order accordingly and then tell me to move forward." And I was tripping because that was my first time having a fully automated like kind of drive-through experience.
Mm,
And I said, man, how many jobs am I risk? Like my first job was working fast food. I don't know what
mm,
you know what I'm saying? So I'm like, oh my gosh, like there's so many people who are going to lose their job, whether
mm,
we deem it whatever type of pay grade or what have you, it's still income for somebody and it still means something for somebody. And my
yeah,
worry is people's inability to adapt to the changes and how that's going to affect it long term. Like homelessness is already like,
yep,
crazy. in different areas, which when you have things like a decrease in income, you have an increase in crime. And so
Mhm.
there's just some areas that I'm really concerned about, and I wonder what will be put in place to either help those who are falling behind move forward or assist them like in some type of manner. I don't know. I'm a bit worried for our future. I love, technology is great.
Mhm.
It's a double-edged sword. Um,
Yeah.
we know we have the wherewithal to continue to adapt, right?
Mhm.
But my concern is for others, the senior citizens who work and don't have Social Security, who are going to
Mhm.
still have to figure it out. It's a little, the kind of stuff like that just kind of weirds me out a bit.
Yeah, that's a whole rabbit hole because I think about these things as well. There's a FinCon panel I did, it was like 2018, where we kind of talked not about the AI piece, but about universal basic income and like, should we just pay people to exist? And like back then it was like this crazy like idea. And now it's
Now it's like,
like, maybe.
if you think that universal basic income should exist, like I would like to know your thoughts about that in the comments. I
I
think
I think I think yeah. I think that the answer is yes. I think now my answer was yes back then. I think it's going to become some sort of necessity now. How we afford it and how it's going to work and how much it should be, those are big question marks. It's probably above my pay grade right now.
we keep finding
So
money. We keep finding money for everything else.
you ain't lying.
If y'all are watching, I am curious though, what are your thoughts around that? Should we have a universal based income?
Yeah,
Do you
and
think
for
that
those that don't know, that is just you are getting a paycheck because you are a citizen, just because you exist. Everybody is getting some money because you just here.
you
So that's what a universal basic income is. But to the AI point, I think there are two routes you can take. So as you mentioned, number one is taking like learning technology and kind of creating the AI part of it. But
should?
also there is the artisan craft part of it. So you brought up like the fast food part. I think that
Mhm.
middle, super replaceable, very quick, like unfortunately, those are the jobs that are going to get replaced. But when that does happen, there is a segment of the population that is going to kind of everybody's going to need a fast, not everybody. Most people are going to need like the fast food thing every now and then. But there is always going to be a segment of the population that wants sometimes like I want something that's like handcrafted luxury. I need this made by like the best burger chef or whatever possible. And
Yeah.
I want to, so like you could also, let's say you're working at a fast food spot, you can also like specialize in that and get very, very good and become the expert at that and go that route. So that's an option too. Like, I'm kind of getting into watches and stuff because I'm an old man. And that's kind of what you do as you get older. But like there's a bunch of like Apple watches. People do that all the time, right? But also there are watchmakers who make watches by hand and they sell them for 50, $60,000. Is that me? No. But that man's job has been replaced decades ago because you can get a $12 watch from Walmart right now. Most people don't care. However, it's celebrities and people who spend tens of thousands of dollars on watches because it is handmade and it is made by some special artisan guy, right? So that happens in every industry, whether it's food, fashion, all that type of stuff, because it is made by someone handmade and it is boutique or whatever. So that's another area because as things become more AI, some people like I prefer something that is like hand stitched by somebody's grandma because I know it's special.
But
Yeah,
one of my favorites, I guess, examples of adapting to the times changing is, did you ever watch Hidden Figures?
yeah, I did.
You remember when they were getting ready to lay off all those women and she learned how to operate the IBM machine?
Yeah,
And they
yeah.
couldn't figure it out. So then she
Yep.
was like, she kept going for a supervisor position. They wouldn't give it to her, wouldn't give it to her. Until suddenly she was the only one who could operate that because
Hmm.
she went and she got the book that they didn't want her to have and she studied it. And then not only did she become the one to be able to operate that, but she taught all of the women in the department who were also going to lose their jobs how to
Hmm.
operate those machines. So they adapted and assimilated, and now they were able to move forward with it. So, yeah, I think we're gonna find we don't know we don't know what we don't know. So I
Right.
think as time continues to change, we'll find those pockets where we can assimilate and things can change. Like, yeah, fast food jobs are likely going to go out the window. I've seen some like fully automated, the machines do the burgers, the fries, the bagging and everything. I've seen the concept be played out. There's going to be a shift somewhere where where we're going to assimilate and we're going to fill the gaps and find that. So I just want to say, I so appreciate your perspectives that you brought to the table, the insights. I think that consumers are really going to love listening to this. And I think new investors are going to love listening to this too. We are in a pivotal moment, but it's what policies get passed, it's how the Fed rate will continue to move. It's how the economy is going to react, right? Those things are really, in my opinion, kind of what matter most. And so having someone like yourself who is so well versed in about the economy, and about finances and about the stock market and giving your perspective, I really, really appreciate you coming on.
Thank you. I appreciate it.
You're welcome. Do you have any closing remarks you want to make?
Yeah, I would say there are two main things you should take away from this conversation and as you leave and go off into the social media world. It's gonna be wild out there. So number one, you want to continue to take a long-term outlook on this entire thing. There's going to be a lot of reactionary stuff out there. Don't let a headline, one Facebook post, one Instagram post change your entire portfolio because when you sell or you do something in your portfolio, that's going to cost you money. Okay. And it could be a tax bill or what have you. Don't do all that. Okay. So always take a measured approach. And again, this is a long term game. And regardless of who takes over tomorrow, next year, next election, so on and so forth, like you are still investing for more than 4 years, for more than 10 years, for more than 15 years for the vast majority of us. And we have seen election over election, Congress over Congress, the stock market does tend to rise over the long term. And I think that is the most important thing. So obviously, you want to, take some notes today, make a few tweaks here and there, but stay focused on the long term. Don't sit here and say, "Hey, I saw this thing. I need to make some changes," and try to hop on the hottest trend tomorrow. And then 2 weeks from now, you heard something and keep trying to like jump from thing to thing. That's not always the best thing. Okay. So everybody relax. If you need to take a social media break, do that. But again, it is a long-term game, especially in the stock market. And stay focused on experts. Okay. Not everybody out there is good for you. Okay. So make sure you're following the right people who are informed about what's going on, and stay safe out there and keep your portfolio safe. Protect your chickens.
Like your chickens. Thank you so much. Where can everybody find you?
Yes, you can find me on all things social media at Building Bread. I thought drop 3 videos a week on my YouTube channel is where I'm most active. So you can holler at your boy there. I'm in the comments and everywhere else.
Thank you so much, you guys. All right. My name is the Bougie Banker. You guys can follow me, like, comment, and subscribe. And yeah, for anything budgeting, saving, or investing. Bye, guys.